Hello, can you hear me? Oh no. Let me try to restart this thing. Can't get my camera to work. 1 second. Yeah. Let's let's go. Have to cut that down. Come on. How does this thing work? Oh boy. First one was easy. All right, well, we're covering CPI today. It's coming out in what 12 minutes, and this one's important. If it this could kind of kick off the next bull run, or it could keep us in a correction for a while longer, in my opinion. So this is a really important CPI report, and hopefully, I'm hoping it comes in. It comes in at expectations or below. If we get a hot read on this one with no revisions, I think it's going to have it's going to extend this correction for a while and deepen it too, which is totally a possibility, unfortunately. So I'm trying to see if I can share my screen. I've done it before, but I don't know why it's not working right now. This is my second live stream, so my apologies. I want to look at some charts with you guys. If I can figure this thing out. Sorry, guys, just trying to figure out how to share the screen. What's up, James? How's it going, man? Sharing screen. Gonna have to Google this one. Got a whole PowerPoint and everything to share with y'all. So yeah, last CPI report, we're looking for things that came in hot. I mean, anything can technically come in hot. The PPI report yesterday came in hot, but there was an equal revision to the previous report. So kind of a mixed report. I'd say that's neutral, not bearish or bullish. The last CPI report had electricity came in hot. Looks like electricity is hot again, just based on month-over-month data. Gasoline came in pretty hot too on the last report, but it looked like I'm trying to pull up the data here for you, but it looks like gasoline has leveled out and shouldn't be too inflationary on this report. But like I said, there's maybe 150 categories, so any of them can come in hot. Certain items matter more than others, right? Like oil prices are have a huge impact on the entire supply chain. So, increase in oil prices can affect the entire CPI report. Multiple items in the CPI report. So, oil's kind of been on a downward trend lately. Hopefully, that's reflected in this month's last month's CPI report. Basically, today's CPI report that reflects last month's data. Right. How to share screen on live stream. Come on. And then for everyone here, I'm going to do after the CPI report, I'll go through some project updates and then kind of get into a little bit more about how I look at projects and research projects. So if you want to follow along on the CPI report, it's I usually watch it on this website. I'll try to link it see if I can link it in the chat. It's investing.com-economic-calendar. And they post that pretty quickly. Okay, streaming settings. Man, I know a lot of people use like this streaming software, and that usually helps. But I'm a neophyte, so let's see if this works. That does not do it. Does not do it. Ooh. Oh, wait. Is that it? Hold on. Might have found it. No, I don't want that. What's going on? Oh, no. All right, let's get back to it. The other thing in the CPI report is housing. Everything else equal, we expect CPI report to come down due to housing, because housing is measured by like monthly rents renewing, and most people are on 1 month leases or 1 year leases. So when their rents renew, then that data gets captured in the CPI report, and like usually inflation's a little slower moving, but this inflation spike came very quickly. So, kind of like it took a while for housing to get baked in. It's taking a while for housing to get cooked out of it as well. So we expect that to come down. Yeah, I don't know if I'm gonna be able to share the screen. Oh well. All right. Anyway, well, I guess we'll just continue. Maybe I'll try to figure it out later. What else we got? Transportation services came in hot last time. Insurance, I'm sure I've seen my insurance go up like significantly. I'm sure you guys have as well. So we want to see insurance hopefully level off. I don't think it's going to come down. I've just heard of too many people getting huge insurance bills. And then airfares were also hot. Airfares go up in the summer, so I don't expect to see relief on that. Man, I got these great links to show you guys this data, but it's not can't pull it up and show you guys. So basically there's a map of electricity month over month in every state, and you see in most states electricity rates have increased month over month. So I don't expect that to go down. So the forecast is for 0.4 for month over month inflation, and hopefully, man. Hopefully we don't see that. Let's see, year over year, 3.4% is what the forecast is. Last month was 3.5, and we could get revisions to like bring that down. Previous months, that would be good, but there's no guarantee on that, right? So I really think this report's going to be, could be an inflection point to the upside or the downside. Like if we hit, so what I think is going to happen is if we hit forecasted for 0.4, if we hit 0.5, that's just going to or higher. That's just going to decimate the markets, and the correction is going to continue because basically the market wants easier financial conditions, and the stock market responds very quickly to these conditions, right? And what they're banking on is the Fed cutting rates to provide more liquidity to the economy, so that more people have money to invest in stocks. And if basically what the stock market is doing is forecasting what the Fed's going to do. And if inflation comes in softer, then they know that like the Fed will cut rates soon or eventually, in the near future. And if you look at the charts, I was going to show you this too. But if you look at the charts, the bond market actually almost looks like it predicts the Fed rate cuts, and I think that's because they know the Fed's mandate is two things. The Fed's mandate is unemployment and inflation. So they need to keep inflation at a certain rate. They've said that they want it to be 2%. Right, that's their target inflation rate. So if we see weakness in jobs or weakness in inflation, and we're at the state we are right now, like elevated inflation, decrease in either of those is good news for the stock market, and the bond market also responds to that too. So CPI comes out 8:30 Eastern. Yeah, 2 minutes, man. 2 minutes. Morning, CD. How's it going, man? Good to see you. If you're just joining, we're waiting for CPI, and we'll cover that. I'll pull up the stocks to just see where we're at. Pre-market. Looks like pre-market's not much movement. We ran into the close. That's always makes me a little nervous when we run into the close. Whatever we do into the close the previous day, it seems like the news is opposite, right? Although short SQQQ, the triple Q's short ETF is up 0.10%. IWM is up 0.15%. So that's something else to watch, right? Like when bull markets start to mature, small caps do really well. So QE, this is a question. QE means inflation going down. Oh, I'll get to that. Let's see if the CPI report comes. Oh, it came out. Oh, it missed 0.3%. Yes. 0.3% forecasted for 0.4. That's month over month. Core CPI was 0.3. It hit forecast at 0.3. I'm going to dive into the numbers here. Core retail sales hit the forecast, was revised down. Last report on core retail sales was revised down, which tells me a little bit of weakness there's a little bit of weakness in the consumer. Awesome. No revisions on the regular CPI. Let me pull this up. I'm sorry I don't have screen share. I got to figure it out next time. My bad, guys. But we're going to pull up the CPI report, which is taking forever to load because everyone's trying to get on it. But let's look at where there we go. I've got it pulled up here. So no, update. The BLS site is not updating, unfortunately. Dive into the numbers. No, they still got the March report. Anyway, it's a miss. That is great news for the for stocks. Qs are already up to 0.7%. Wow. IWM's up to 1.5%. Jeez. Wow, that response was immediate. This is phenomenal news for stocks. This is phenomenal news for crypto. Risk assets are going to go wild on this news. I think this is the inflection point that sends us back into a bull market. I mean, I think we're still in a bull market, right? But this is going to kick off the rally for the rest of the bull here until we hit the next inflection point, which is most likely going to be recession. But I think we got time. We got months. Phenomenal news. Tesla's up 2%. Let's see what Bitcoin's doing. Bitcoin's up 3.5%. I mean, this is great news. And the Dixie. So one of the things to watch is the Dixie and the 2-year bond, because when the Dixie goes down, that basically eases monetary policy for the world, right? If dollars are cheaper, that means internationally people have more money to spend on less money. They spend less money paying their debts because most debt is dollar denominated, which means that they have more money to spend on other things. So seeing the Dixie go down, it's down zero point 0.2 basis points. That's good. We need to see it come down a lot more before we get a huge effect on that. Actually, in Europe, they have a name for it. I think they have, depending on what country you're in, they have different names for the dollar, right? The dollar rallying or the dollar, going down and basically easing conditions for them. That's great news. I'm so happy. So we'll see how that plays out over the day, but over today. But I expect this to kind of kick off the next leg of the rally. So phenomenal. Thanks for being here, guys. And we'll go through some other updates. I'm gonna try one more time to share my screen now that CPI is out. Let's see if it loads the. No, it's not loading. It's 5:15. There it is. All right. It says index fell for all items less food and energy, rose 0.3% after rising 0.4 in the last preceding 3 months. Great news. It's telling us that there's, this latest increase in inflation and CPI. Hopefully, it's just a bounce. That's what we're hoping now that we've got some softer CPI numbers, and that's what you expect with a tight Fed, right? A Fed with hawkish Fed with high interest rates. Let's see if we can get down to the items here. Let's see where we got some good. So cars were, is that right? Yeah. Wow. Cars were down 1.4. That's good news. Motor vehicle insurance was up. Like I said, insurance did not see any relief. It's all a little bit of relief. It's half what it was last month. Let's see what else we got. March 24. Eggs were down 4 point. Yeah. Let's see what else we got. Looks like food is kind of holding some inflation. 1 to 0.5, 1. A lot of these big ones. Alcoholic beverages were down. Let's get into energy. See if the energy predictions were right. Oh no, energy got hit hard. Energy was 2.0, 2.6 last month. So it did come down, not as much as I expected. All items less food and energy. Let's see what electricity did. We got electricity. Electricity is actually down. So that report I was getting, looks like it might have had some errors in it. It wasn't exactly accurate. Apparel's down. That's good because apparel was up significantly last report. Man, a lot of negatives on this report here. I wish I could share my screen and show you guys this. But just running through the CPI report here on the BLS website, and kind of tells you where the inflation is coming from. And let's see, computer software is up. That's surprising, but good for the software guys, right? And what else? Moving was up. That's wild. I guess people are moving. I do know a few people selling their homes and trying to move. So transportation services, it is up, but it's down significantly. It's down over like 90%. So that's good. Yeah, it looks like there's not a lot of items in here that are really ridiculously high. No items like in last month's report that just look outrageous, right? So that's good. Good news. Good report. This will be great for stocks. I'm excited. The Fed said they need a couple more reports before they start easing. So before they start cutting rates. So let me get back to the questions. So we had a question here. If you're just joining, good CPI report. We got 0.3 instead of 0.4. The market's going to love it. SPY immediately went up, 40 basis points, 50 basis points, actually. IWM, which is the small caps, is 1.4% up pre-market. That's a huge pre-market. So, yeah, the pumps in the stock market should be good. Now, I'll probably play them, but you got to be careful because sometimes, people get really excited and then they kind of bleed off. All the volumes kind of in the beginning of the day and the end of the day. But it should be a good day. Should be a good day. I've got some long calls, so hopefully they do well. And let's see. I had this question here. Okay, so it said so QE means that inflation is going down and the rates are being cut. No, that's not what it means. So you have to think about it. When the Fed interacts with, or when the Fed acts, you got to first know that like there's a delay of, I think it's somewhere between 14 to 18 months every time the Fed makes an action before it actually filters down through the entire economy. So first have to understand that. And then QE actually, uh, it does push rates. It pushes rates down, right? And that's a form of easing. And the way you can think about it is it puts more money into the economy. So people have more money to spend. And that's why it's called loosening or easing. Um, and right now we're actually doing QT, which is quantitative tightening. The Fed's letting bonds roll off of its balance sheet, and by doing that, instead of purchasing them, they're actually it's a form of QT where they're not buying back as many bonds, and it's effectively reducing the rate at which they're tightening. So it has like downward pressure. Reducing QT has downward pressure on rates. It doesn't. It's not like technically easing, but it's also the first step of the easing process, because the Fed doesn't like you know very rarely does the Fed ever wishy washy and like change its mind right on stuff. It's usually either going in one direction or the other. And now that we got a softer CPI report, we can say with more and like unemployment has started to tick up a little bit. It's probably the case that they're going to have to start easing at some point soon here. So we can say that by them cutting QT, cutting the rate of QT, they're probably going in the rate or in the direction of cutting rates. So anyway, appreciate the question. That's could I please elaborate about altcoin season? Yeah, absolutely. I was going to get into that, and I had some charts to show you. Sorry, I can't figure out how to share the screen, but I'll go through it, and let's go through that right now. Actually, so I've got this chart pulled up here that unfortunately you guys can't see. It's but it shows that it's basically the chart of Bitcoin dominance, and what it shows is that when Bitcoin dominance starts to decrease, that's when all the alts are doing well, and that's when you really see alt season, right? So the chart kind of shows that like it doesn't happen like immediately when the way I look at it is there's two different rallies that occur during a bull market. There's the rally that starts with like big cap stocks, right? You think of like the Googles of the world, the Teslas, the Metas of the world. I mean, Tesla might not be a great example this time because they're being hurt really bad by interest rates. But if you look at the big companies, the Apples, the Googles of the world, they do really well in the beginning of a bull cycle. NVIDIA also, this case is a good example. And then that money, once those start to get kind of inflated and people are like, oh, these are a little bit overvalued, they start to shift their money into lower cap stocks or smaller businesses. And the same thing happens in crypto, right? People put their money into Bitcoin. When Bitcoin sees a good rally, then they make some money. They feel rich. They're like, oh, well, I don't know how much return is left in Bitcoin. Let me go play some of these smaller plays with the gains I've made and see if we can't, see if I can't make some more return on these smaller plays. So the second half of bull markets, generally the smaller cap companies and cryptos do well. That's what you see in the Bitcoin dominance chart. Bitcoin dominance just tanks. Like it just goes, you can just see red bar after red bar after red bar. And Bitcoin dominance is just how much market cap Bitcoin has is the rest of the crypto market. So we'll be watching out for that. And there's not an exact like dollar amount that you look for or like a percentage you look for on that. you just kind of see the chart rolling over, and I think that's the next step. You can also look at ETH Bitcoin dominance, although ETH's become a little more higher market cap, so you're not gonna. I don't think you're gonna see it quite as pronounced as in the BTC dominance chart. But yeah, I think altcoin season is only a couple weeks out. I wish I could show you the charts, and we could look through the timing together, but maybe another day. Um, yeah, let's see what happens when the market opens. I think the market's going to rally. We'll see, but I think it's going to rally. All right, let's go over some project updates. Let me pull up some of that stuff here. So we've got start off. I know we got a lot of the Open GPU guys here, so I'll start off with them. There's been a lot of updates since the last video I did, and they've been moving pretty fast. So first thing is, right after I made the video, I think a couple days, they did a partnership with AI crypto called Resistor AI. I know they've got the Resistor bot in the chat there. And basically, Resistor AI is a partner in the sense that they're using them as kind of AI computing power in the future, or that's the plan. So OpenGPU doesn't have they're not, they're still in DevNet, but once their testnet comes up, I think it's supposed to launch sometime in June. Companies like Resistor should be able to begin using the network for AI computing power, and that'll be really good to see it implemented and see the network in action. They also developed kind of out of the blue a DEX. They're calling it Open DEX. Pretty impressive. They made it super quickly, and they ran a competition to test out the DEX. It seems like it performed really well. And basically, you bought meme coin to whoever had the most meme coins will win an award. But basically, the idea of the DEX is to. I was just really impressed at how quickly they built that. So that was launched. The execution is good. I really like seeing execution on projects, especially new projects. It tells you that the developers know what they're doing, and they can pump stuff out. And when they do it, in a way that's like seems like it's pretty high quality. Like I'm not technical enough to go look through it and understand if it's what level it's built at, but it's very functional. I know devs in their chat had good things to say about how it was built, so I think that's really good news. They're also announced that they're going to come out with their own token standard. It's called ORC20, and the idea around it is that to solve the problem that Solana is having with a lot of scam projects being built. So kind of a community-driven token standard that, in order to create a new project, you have to get community approval, basically. The idea being that OpenGPU provides some analytical tools. Well, first, the project creator will have to front some money to start by fronting some tokens into the creation of the project, and then it'll kind of sit in a queue as the community votes whether it's a project that should be launched or not. And the analytic tools provided by OpenGPU they're going to be designed to kind of spot scam projects or projects that are built with malicious intent, and the community can vote for those projects to be approved and launched. And if they're not, the funds are returned to the creator, and the project isn't launched. So it's a pretty novel idea. I think it's a good idea. I'm interested to see it implemented and kind of see how the community responds to it and like how it works. Because a lot of these economic ideas, they're great, but you really want to see them in action in the marketplace, because you just don't totally know, right? And got a warning here. What else we got for OpenGPU? They're preparing their token launch. I don't know. They don't have a date for that. And then they'll have a private GPU. They'll have a private sale for their DEX token. So yeah, with their DEX, they're coming out with a token, and the DEX fees will actually buy back their current token. So it'll help basically help burn the current token and decrease supplies, from what I understand. Um, Correct me if I'm wrong there. Uh, yeah, market futures showing 150 points at open. Yeah, this is wild. This is the best CPI report we've had in months, and this in like 3 months. So I think that's all I got on Open GPU. Those are the big points. They've got some competitions going on, so if you're interested in the project, go check it out. I really like their Telegram. I don't like Telegram, but their Telegram's well run. Let's see if I have any posts down here. Thanks guys for joining. I appreciate you being here for the CPI report. That was great news. Great news. What else we got? We got Centrifuge. So Centrifuge is another project I really like. It's very well backed by VCs, and they're got a proposal. I'm trying to find this proposal that they had. Like again, this would be so much better if I could share my screen. They had a governance proposal where they're trying to get approval to launch some new pools, some new lending pools. Because my biggest critique on Centrifuge was that they didn't have, they had like all these real world assets, but they weren't really increasing the number of loans they were putting out. Right? I didn't see, and they got a governance call coming up today, so I'll listen to that and give you some updates on what they say. That's probably the better way to go. Centrifusion. Goldfinch is still working on repaying their on getting repaid for the Lend East, switching over to GFI. I really like GFI too. Well back. The team is brilliant. If you talk to those or like listen to those guys, they know what they're doing. And now they have a proposal. There it is. So GFI has a proposal to pay back their basically the holders through the treasury. Now I have like mixed feelings on this because like on one hand, I think it looks like it's so far it's going to pass. It just started last yesterday, but if they make it like if they make it so that they're always paying back their token holders who on loans that default, like that's great, but at like some point you're gonna run out of money, right? Like you can't do that forever. So you either have to get smarter on how you underwrite the loans and what kind of loans you put on, or you have to like make sure that your token holders understand that like there's risk in these private loans that they're putting out. Now the Goldfish model is changing. I think it sounds like they want to do more collateralized loans, which means like loans with things that they can assets they can seize. So the amount of principal that they lose is holders lose or investors lose is much less. But I think there's a disparity between what the risk is on these private loans and what the investors like understand the risk is. Because private loans are really risky. Like it's just the nature of private loans, but they pay a higher interest rate. Now I will say like the Goldfinch team they've got some really good members on the team that are really good at collecting on these private loans. Like it's a hard thing to do, and that's where like private loan portfolios are successful. It's collecting on them. It's not really, I mean, underwriting them, sure, but like that's important. But the ones that do well are the ones that collect the principal that's unpaid. So anyway, they've done a good job on all of them. They've restructured the last two, and then this is the third one. And it sounds like they're having trouble restructuring it. They did get an initial commitment to, I don't think it was a legally binding commitment, but initial commitment that they would get 70% of their principal on this Lend East loan paid back. But from what I've seen in their posts, that hasn't come to fruition yet. So I haven't seen an announcement that's official. So there's been a couple different, loan help with principal losses. So let's see. This proposal says Lend East situation has been a significant shock to the Goldfinch community. There are other borrowers that may default on their loans. Yeah, some of them are paying late too. The Goldfinch Treasury's GFI holdings can help lenders. Proposals provide two approaches. So one of them, GIP 62's got 25% upvote, and GIP 63's got 55% upvote. So Let's see if I can pull those up. Let's see. Proposed goldfish community set up 1.5 million GFI. Oh, so the one's looking to create a whole new pool that will reimburse lenders in all existing pools, and that's 90% goes back to borrowers that lose money on loans, right? And then 10% goes fees. So that's that proposal. Oh, okay. All right. So it is. They do say no more than 50% of losses from a single borrower. Can't talk. Single borrower will be covered. So that's good. It's not a total repayment, but it does ease the pain. It lessens the fear a little bit about kind of being draining the pool or treasury. So, and then the other proposal 62 says that emergency funds to make principal loan payments in cases of current and future defaults. Yeah. Doesn't specify like how much it'd be repaid or when or why. Anyway. All right. Well, I was gonna do some chart reviews too, but unfortunately, like I said, no screen share, so not gonna do that. Let's check out some of the other projects. See if they got any news. Not a lot of news. No news in Forta. Oh, I heard Forta was releasing. Someone commented that Forta's releasing some more tokens to their circulating supply. So I'm gonna check that out because that's never great news. It's never great news. But I still think Forta is going to do well this bull cycle. I mean, they've got a utility token that's going to be it's going to be used. It's already used. Their products being bought by individuals and companies. Like it's an enterprise solution, and I think it's going to do well. I guess just the question I have on Ford is like, are consumers going to get excited about it too? You know, I think they're going to have to see it come across in the tokenomics. And one thing Ford did do to kind of alleviate that concern is they opened up staking pools to everybody. So if you wanted to go stake, last time I checked, they had like 30%, almost 30% average APR on their staking pools, and that's great, right? That draws in stakers, draws in consumers, retail investors, and whales. So that's good. I think that's all the announcements I had. Oh yeah, I was going to go over some research stuff real quick. Man, I might put this off though, because this stuff you really need to like see the screen. So anyway, all right, guys. You got anyone got any questions for me? Did I lose everyone?